up to 4 2013 silver American Eagles from the dock by guessing silver's closing price for the month of October. Click on the Silver Giveaway banner on the homepage of silverdoctors.com for more details.
Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. We had both gold and silver slammed early trading this morning. Gold smashed back under 1,300, traded as low as 1,261 today. The waterfall decline was so vicious. I believe it was over 60 tons of paper gold was dumped on the market in under 5 minutes, and it broke the Comex, or the CME. Trading was halted for about 20 seconds early this morning. Silver down hard as well. It actually broke below 21 during that smash, hit a low of 20.93. Retraced about half of those losses to close the day in the access markets at 21.34. But Eric, another big smash of gold and silver. Obviously, the cartel trotted out the excuse or explanation that this was on news of a possible debt ceiling agreement, but that should have made, if anything, gold and silver spike the other way.
Yeah, absolutely. And once again, this is the same pattern we see where a very large amount of gold and silver, both had the same pattern, were pushed through a small period of time, which is totally illogical. If somebody has a margin call and they want to get the most for the money that they have, and the assets that they're selling because they're forced to sell, which is presumably the logic that the mainstream media and the Kitkos of the world and so forth speak of when they say, oh, big crash, somebody was forced to sell because of liquidity reasons or whatever. Even if in that extreme case, a person, a trader, a brokerage firm, what have you, when they're in a position like that, they want to make as much of an ordered retreat as possible, and these kind of patterns are obvious cases of manipulation, and that happens over and over and over again. And we even saw this in gold's trading in the after-hour session on Thursday, where a very large amount of gold contracts were dumped, something like, we've got the order of about 20% of the entire day's worth of trading on the Comex. We came through in the after hours in the most illiquid period, and you have to ask yourself why. I mean, the market were open all during the day on Thursday, and if somebody was stuck, they could have easily had sold when the market was more liquid and had been better able to absorb the selling that they quote-unquote had to do. So it speaks to the forced nature of cartel actions painting the tape, and against a backdrop of monetary instability, debt instability, and political craziness that's going on right now, which all argue in favor of higher gold and silver prices. As a pattern that's well established for this going back 14 some odd years, anytime that we have news that is gold bullish in the extreme, the cartel actions working in the opposite direction are in fact equally extreme to paint a picture that keeps people away from the traditional role of gold and silver as being safe haven assets. They just simply do not want people to look at gold and silver as the ultimate money. They want to have people perceive them as generic commodities that offer no ability to hedge against instability, be it financial or political.
And one thing I wanted to touch on for readers, because you're not really able to see this at all, say just looking at a silver or gold spot quote, like say on Kitco or something like that, unless you have a futures trading platform and have it open. Especially with last night's smash, we saw something that's pretty interesting, and it's happened quite regularly when the cartel is telegraphing their big upcoming smashes. And many of our readers and listeners are probably aware of, that was one of the points in the class action litigation against JP Morgan, was that JP Morgan was telegraphing upcoming price raids using the Saxo platform. But what we saw, there's several in the 5 to 10 minutes leading up to the dump last night, and then again here this morning, brief sell orders placed well below the current market price. just showing up and then disappearing, all at the exact same price, and we're talking maybe 30 to 40 cents below the current market price. And to me, that's just blatantly obvious that no rational market seller who's trying to exit their gold position is going to set up a sell order that is in silver, say 30 cents below the current market, or in gold $20 below the current market price.
Yeah, it's a form of signaling, and we see other ways that they signal as well too. For example, silver is often used as a signal because it's a lot thinner of a market, and J.P. Morgan is, or whomever at the particular time, so it isn't universally J.P. Morgan, but suffice it to say, the cartel acting has a greater ability to move silver around in the short term, and that in fact is often used as a signal for within a 24-hour period where the more liquid gold market is going to be attacked, and then copycat traders amongst the hedge funds and so forth come on board once you have a morning light today where on the Comex Open gold is smashed down because it was signaled the day before in the after market hours with an effort of manipulation that took far less firepower, so to speak, in terms of naked short selling by whomever amongst the cartel monkeys were flowing their contracts around. So that also has been documented in that lawsuit and elsewhere, and Ghana has spoken about it too. And when people need to understand too that when we speak about patterns, I mean, this isn't something that is an occasional thing that happens. We're talking about easily 14 years of statistical observations that just belie the manipulation efforts and speak to levels of probability that cannot be explained by normal market analysis. It's just these markets are not acting like markets; they're acting like managed operations, and it's very clear when you look at these patterns over the course of long periods of time. But all that said, it's actually kind of interesting because last week we had China premiums in Shanghai versus world prices for gold going down to as low as about $8, maybe $9 or so, which is a far cry from where it was, say, a month ago at $30 over world spot prices. But at this point, they're beginning to creep up again. We're moving more in the $15 range, and over in India, we've got prices that the ex-duty premium in India was about $88 or so in the AM, and about $105 or so vis-a-vis world gold prices in the PM close for India. And over in Vietnam and Thailand and other pretty reasonably sized markets, we're beginning to see premiums rise again too, which is speaking to the fact that all of these shenanigans that we've been watching as this whole debt crisis, Obamacare debate has been going on, and the associated bombings that the cartel have been doing is creating yet once again something pretty similar to what we saw in April, May, and June, where the disconnect between the physical market and the paper markets that are being bombed to smithereens is beginning to widen again, and that suggests that there's not a huge amount of downside left. I mean, unless whatever happens where on the political front, Washington just decides to shut everything down and people really begin to freak out beyond what we've already seen, and we have a deflation crash scenario a la 2008, and who knows what would happen at that point. Short-term, gold and silver could easily fall a lot more because of pure liquidation panic, but at least in the short term, it looks like the physical market is beginning to growl again, and even with India being slapped with all of the restrictions that they're applying to try to slow down net aggregate demand, the Asian markets are beginning to have an impact. So hopefully, this is going to speak to at least some slowing down of the cartel's ability to act at will and at their whim.
Right, we're seeing that in the global markets in Asia, especially the wholesale markets in gold. Not seeing it too much yet, at least in the retail silver market here in the U.S. Demand really has been quite subdued over the last probably month or 2 months, and a lot of that I think just has to do with precious metal investor fatigue. There hasn't been a lot of exciting action. Both metals are down so far from their highs, and the gains starting in late June, early July have kind of stalled a little bit. And what we did see, at least here at SD Bullion, big demand and lots of purchases here today on the big smash on Friday. Demand overall has been quite subdued the last couple of months. So both the retail gold and silver markets here in the U.S., I think they've still got a little bit of room. It would take probably a week or two of sustained demand like we saw today before we started to see the type of supply constrictions and shortages and delays that we saw back March through June of this year. But definitely starting to see it on the premiums in Asia starting to pick up again. So we'll keep our eyes on both of those things. But moving on to the debt ceiling talks and negotiations, Eric, it certainly looks like, while there's no deal yet, that, like as we anticipated, the Republicans are going to be folding probably sometime soon here.
Well, I don't know if folding would be the right way to characterize it. They're certainly not going to be doing that in terms of their negotiating strategy just yet. Where we are now is pretty much the same place that we were yesterday, even though there has been further talks. I mean, John Boehner came in, majority leader of the House, and had the discussions with Obama, and they supposedly spoke for about 90 minutes or so. And the bottom line with that was, at least to some extent, it was being reported by CNN's chief national correspondent, John King, saying that the fact that Paul Ryan was stepping in as well too, and basically making it clear that the Republicans, as the majority of the House, were not going to completely back down, but would want to have some form of a 6-week period where Obama would be hopefully willing to discuss things more under calmer conditions. And even though Obama, to the press, was saying, well, I'm not going to negotiate about anything with respect to anything that deals with partisan issues, and tying that to the debt ceiling in a backdoor channel kind of way, he at least acknowledged that the Republicans do have the ability to hold things up, and that this game of chicken is kind of dangerous. So maybe, just maybe, over the course of the weekend, we'll see the further discussions that are planned bringing something out that's positive. But I wouldn't hold my breath, because basically, at this point, the mainstream media, for the most part, and the Democratic Party have basically won the majority of the framing debate and have been successful in characterizing this as a Republican Party production in terms of the blame. And I don't believe that that's a fair characterization. I think that this is actually a relatively 50-50 kind of scenario, where there's been certainly many places and opportunities for Obama and the Obama administration to diffuse the situation, and they purposefully did not do that. In fact, it upped their negotiating position to a more stringent posture, specifically to try to get the framing going in the direction of the Republican Party and blaming the Republican Party. They were largely successful at that. So this really is a game of chicken. It's very dangerous. And then when you layer on top of that this whole trucker protest going on in Washington, and the belligerency with which the Obama administration has been steadfast in their position, to the point of actually issuing directives to Park Service employees and park rangers to remove water fountains, or just, they didn't literally say that, I should retract that. They said to, and this is in fact a quote, make life as difficult as possible, end quote, for people who are going to national parks. And in turn, that was interpreted by one park official as, well, let's just go and remove the water fountains.
And as of Friday, they've even stepped that up. I was just reading here, the Obama administration, they're now sending out park rangers 24/7 to start patrolling the parks and arresting anyone they find in them. So.
Yeah, I mean, that's just ridiculous. It's posturing. It's a political, cynic move in an attempt to just have people get mad and then blame it on the Republicans. And I'm not saying that the Republicans don't have their role to share in this whole debate, folks. Please understand. I mean, I clearly see that this is a joint production here. Both parties have much to blame when it comes to having let this situation come to a head over the course of basically many years of not dealing with it. I mean, the entire Obama administration has been operating under governments without budgets, as but one example. I mean, come on, we have a federal government that hasn't had a budget in 6 years. What's the deal? It clearly speaks to the fact that we have representatives that don't want to be representatives. They don't want to actually take on the formal responsibility of governance, and that's a real sad state of affairs. Part of it is that the American people have gotten a little bit lazy, and they're more consumers as opposed to citizens and civically minded and participating in the political process and so forth. I mean, we get the government that we deserve, and this is more of a universal statement as opposed to anything that speaks to partisan politics. But nonetheless, we still have a bunch of leaders that basically don't even pay attention to what they're doing. I mean, they don't read the large bills that are created by all the lobbyists that put these bills before them. We get these massive quagmires such as Obamacare, and my interview with Dave Janda, Dr. Dave Janda, speaks to all of this. We document a lot of the history behind what happened with the passage of Obamacare, and it's a great interview. I strongly recommend everybody to go check it out over on the News Doctors. It's pretty eye-opening. And here we are. We have a government impasse. Surprise, surprise. No one wants to take responsibility and act like statesmen. Everybody's running around like a chicken with their head cut off.
Right, and there's only so much you can play with when you're talking about the bond markets. And now we've seen the 1 month that are coming due here in the next couple of weeks. I'm starting to ease up a bit, but the 2 month bills are starting to rise on expectations that they're just going to take this another 6 weeks and have the same thing all over again. So,
right, and Jim Willey's been positing the thesis that the bond market is now being actively managed with flash trading, and I agree with him. You can see it, and you certainly have the mope when it comes to that entire debate about, we're going to taper, and then boom, we're not going to taper, and then the bond market crashes down after it was just beginning to flicker over 3% on a 10-year and so forth. So, in the grand scheme of things, we don't have markets anymore. We have what are managed half-breeds. It's really quite astounding to see what's going on, and all this does is just lead to grand instability across the board. And Doc and I were joking before we got on the air about how we probably are looking at a scenario where there's just a whole flock of black swans kind of looking at each other and saying, "Hey, is this the weekend that we're going to take off and fly? No, let's just wait till next week. It'll probably be more interesting then." The conditions are here where we are in the eye of the storm, and almost anything could set us off at this point. So, we said this before, and we're saying it again, there's the role for owning precious metals as an insurance. And despite the fact that it keeps getting brutalized, these markets, gold and silver, and in particular the equities markets for the mining shares, it's unbelievably brutalized at this point. But the value is still there. The dollar and all other world currencies are continuing to be debased by quantitative easing, and the increase of debt in the industrialized countries across the world is rising. And these dynamics over the long term, by definition, have to translate into higher gold purchasing power. Maybe not in terms of nominal prices, but over the long term purchasing power. They will serve their traditional role as a pure hedge, regardless of how much the cartel huffs and puffs within a short-term period. So it's really the bottom line, folks. The fundamentals have not changed. They've only grown stronger, even though it looks like they haven't.
Right. So several things to watch here this weekend. Besides the baseball playoffs, the debt ceiling, ongoing negotiations or lack thereof, the big trucker protest and rally in Washington, D.C., the mainstream media continues a complete blackout on that.
You should probably also toss out, too, it's really interesting what the truckers are asking for. If you go out and look on theblaze.com and Glenn Beck's operation, you can read some of the demands that they're putting out, and they kind of sound like constitutional scholars. They're talking about doing away with the NDAA, Natural Born Citizen Clause of the Constitution, and how that pertains to Obama and his legitimacy to serve as president, and on and on. All of these things that are actually pretty intellectual and dealing with very important things that are of legitimate concern to a large number of Americans, and they're always poo-pooed in the mainstream media. You know, people who are the gatekeepers of the cultural zeitgeist would prefer people to look at what's going on along the lines of what Saturday Night Live has been producing when it comes to characterizing how the Republicans are acting, and or Jon Stewart and so forth. So, yeah.
Right, we'll keep our eye on that, as well as the gold and silver markets. We've had a couple of week downtrend in both the gold and silver. Gold's really only about $90 now, up off of its low of, was it June 28th of was it 1179 I think was the bottom, 1178, somewhere around there.
Right.
So we're only about $90 off that low. I guess it definitely at this point you can't rule out a retest of that low. Silver a little bit more cushion from the summer's lows. Silver's low was right around 18, so still just about $3.5 off those lows. So a little bit more room in silver than in gold. Seems like Goldman got the ball rolling to the downside with gold with their big prediction this week of, what was it, 1050 to the down target for next year, and I think I saw Jeffrey Christian was trying to back out gold going to zero. So
you can't say to zero because then he would have no business. But you know, so all of these folks are always very attuned to the technical picture because they know that the technical picture can be amplified by all the momentum traders. And if you look at gold, we've got, you know, since the beginning of September, a series of lower lows. In the month of September supposedly being the seasonal strong period, so when this all happens, and it was most certainly a process of the cartel guiding the trading, you just basically destroy the sentiment in the sector. People were expecting September to be, you know, the turnaround and the final, last period of pain where, you know, over the summer it was just horrendous. But here we are again. Everybody's now beginning to go through the whole same process again of, you know, the typical equity position in mining shares, for example, just in the last 30 or 40 days or so, seen, you know, quite a few large stocks get halved. I mean, it's just unbelievable how much pain has been out there. So people are really giving up, and you know, I do think that late June low will hold, just simply because of the fact that premiums, as we spoke of before, in Asia are beginning to expand again, and that whole cycle of the physical market pulling the paper market back up, you know, limiting the degree to which the cartel can act. We saw it happen in the summer. It will hopefully happen again, all over again, and in the next, 7 days, 14 days, we'll see a bottom.
Yeah, I'd agree. I know Martin Armstrong this week came out and called for gold to break back under 1,000, and he said when that happens, everyone and their mother will be calling for I think he said 650 gold. And I'd agree if that did happen, the amount of bearishness throughout the sector and the media would be probably at all-time records.
Yeah.
I'm not sure that I believe that'll happen. Well, it's possible. He's exactly right about what the sentiment would be if you did see that.
It would have to come on the back of some kind of deflation scare rooted on a political blow-up. And
Right,
that's really the scenario we're talking about. Or maybe some kind of a black swan within a financial institution that goes poof and then drags everything else down in a chain reaction. Those are really the two scenarios that could create that kind of situation. But again, like 2008, 2009, it would only be, a 9 months some odd window of pain, because the solution, quote unquote, unfortunately, at least according to the powers that be that are in place now, would be to refloat the whole system with an immense amount of liquidity, and that would push gold and silver back up.
All right, so we'll keep our eyes on the metals going into next week. Hopefully they can hold their lows, especially in gold, around the 1250 level will be key to hold that, as well as DC over the weekend with the trucker event, as well as the ongoing negotiations. So we'll wrap things up there. For the Doc and Eric Dubin, thanks for tuning in again to the SD Weekly Metals and Markets.
SD Bullion.